It is the longest losing streak for the Dow since 2011, when the fight over the debt ceiling prompted fears of a default by the U.S. government. This time, the string of losses is for a different reason. Investors are starting to doubt the president's ability to push through pro-business policies following the defeat of the Republican health bill on Friday. The losses extended to the overseas markets this morning and continued into today's trading session, although stocks did come off of their lows by the close. The Dow Jones Industrial Average fell 45 points to 20,550, its eighth straight loss. The Nasdaq rose 11 and the S&P 500 was off too. Bob Pisani explains today's market move.
The market started on a very weak note with the Dow down nearly 200 points at the open. No surprise, the weakest sectors were those that would be hurt if the Trump agenda of tax cuts and infrastructure spending failed to materialize. In the banks, the industrials, material, dollar was lower, bond yields were lower, oil was lower, and then shortly after the open, it all turned around. The dollar, bond yields, and oil reversed, as did stocks, including bank stocks. S&P 500 went positive in the last 20 minutes of the day, though it ended slightly negative. All right, what happened? It's still being debated, but the S&P held right above its 50-day moving average. That's a technical level. Second, the Trump agenda may be a bit more iffy, but it's not dead, and the trading community still believes some kind of tax cut is coming. Third, earnings season is about to begin, and the early signs are very promising. Now, we may have the best quarter for earnings gains in nearly 6 years. More on that later. Finally, remember all those people who said they wished the market would drop 5% to 10% so they could buy at lower levels? Well, they have an opportunity now, and some may be actually doing it. Volume was not heavy overall today, but we saw heavy volume in financial ETFs. That's important because the banks are well into correction territory already. Most of the big names are down more than 10%. So it looks like some traders were indeed betting at least on a short-term bottom for at least that group. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.